What's going on, guys? Welcome back to another video. In this video, we're going to be talking about AMC, and we have a lot to cover in this video. We're going to talk about AMC as a reopening trade as a whole. We're going to go over exactly why I think AMC could be in a very good position to ride this reopening run-up. We're going to go over Goldman Sachs making a bullish purchase and entering a long position on AMC, and we have a lot of other information to go over that we have been able to uncover about the hedge funds and all of these other institutions that could be significantly screwed in the near future. So before we get into all of that information on AMC, if you guys would like to earn those 2 free stocks with Webull valued up to $1,850, make sure you check out that link down in my description below. It really helps and supports the channel, but if you don't want to support the channel, that is perfectly fine as well. And if you guys enjoy the information and analysis that I provide for you in these videos, make sure you go down and hit that like button, hit that subscribe button, and make sure you turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So when we look at the chart of AMC, we have been trading pretty flat this week. We are kind of hanging around this $10 range, and we are kind of in a pretty decent consolidation period. Now, we are going into Easter weekend, so we could see a run-up, especially with the first quarter of 2021 ending, but we are just going to have to wait and see where the share price of AMC is going to go. Now, in this video, I'm not going to go over any price targets that I think AMC is going to go to, or exactly when this squeeze is going to happen, because I don't think that's really beneficial to all of you guys as viewers, because we don't really know when this could happen. It could happen tomorrow, next week, next month, or a year from now. We just have to keep watching and uncovering new data about this massive situation. So let's first take a look at how the reopening has been going. If we come over here, we can see that over 51 million people have been fully vaccinated in the United States. And coming over to this website, this is going to track all of the different updates for the pandemic restrictions. And if you can see here, eased in Puerto Rico, lifted in Texas, eased in South Carolina. All of these states, except for a couple, are easing or lifting their pandemic restrictions. This is going to allow people to go out into the economy and interact. And all of these reopening plays and the value stocks are getting a boost, as we've seen in the market, and tech has been getting hammered. Now, this could really benefit AMC over the next 6 to 8 months, because if people are able to go out, a lot of people will choose to go to movie theaters. Now, some people are going to choose to stay at home and watch their different shows, new movies coming out on these streaming services. But later in this video, I'm going to show you guys how AMC is also getting into this streaming service. So people staying at home is not really going to hurt their business over the long term. Now, let's get into this Goldman Sachs purchase. Now, we've seen Goldman Sachs be involved in this Archegos situation, or Archegos, however you want to pronounce it. So coming over here, this is big news to see that Goldman Sachs, we can see that Goldman Sachs Small Cap Equity Insights Fund Institutional purchased 12,305 shares. Now, this is not a substantial amount of shares, so this isn't going to really help out the squeeze, but it is interesting to note that companies like BlackRock and Goldman Sachs are taking long positions in a company that many people thought a year ago was going to fail. Now they are coming in and making purchases, and it's going to be very interesting to see over the next quarter what new institutions are taking bullish positions in AMC. Now, I've said this a couple of times in my other videos that I do think that it is going to be a battle between the institutions on where the actual share price of AMC is going to go. Now, we have seen an extremely high number for retail trader ownership in AMC, but I do think that these trades that are going to be coming in from the hedge funds are going to be the significant movers in the share price, and retail is going to be caught in the middle. And as I said in my last AMC video, an analogy I really like to think about is, imagine you have a stick of dynamite with a long wick coming out of it. You are sitting there, retail in all of these bull positions are sitting there with a lighter, and you're clicking it, it's sparking, but it's not lighting. And all you need is one time for the lighter to light and light the wick. Now, there are a lot of different possibilities for how this could happen. We could have some great fundamental news come out about AMC that pushes the stock going forward, Or since we see a lot of these hedge funds are extremely over leveraged, if we see more forced liquidations and one of these funds has a short position on AMC, the reaction in the share price could be super big. So when we look at Viacom, that massive crash in the share price, this was when Archegos had a bull position. So they were forcefully liquidated and we saw a 30% drop in share price. If a short position was owned and had by one of these hedge funds, we would see this move in the opposite direction and the stock would skyrocket. Now, in my opinion, I don't think that these hedge funds blowing up are going to happen every week, but I do think that more is coming. These aren't going to be happening time after time. They're not going to be cycling out, but we have seen these funds be super over leveraged over the past year. And with the SLR expiring today, we could see a lot of volatility coming in the market. And there is an interesting Reddit post that I found that gives us some more insight into this situation. So we can see that Citadel and friends have shorted the treasury market to oblivion using the repo market. Citadel owns a company called Palafox Trading and uses them to exclusively short and trade treasury securities. Palafox manages one fund for Citadel, the Citadel Global Fixed Income Master Fund Ltd. Total assets are over $123 billion and 80% are owned by offshore investors in the Cayman Islands. Their reverse repo agreements are entirely rehypothecated and they cannot pay off their own repo agreements until someone pays them first. The entire global financial economy is modeled after a fractional reserve system that is beginning to experience the mother of all margin calls. So this is why the DTC and the FICC are requiring an increase in the SLR requirements. The madness has officially come full circle. So this is a very lengthy Reddit post, and if you guys would like to read this, you can do so on your own time. I don't want to waste any of your guys' time because your time is very valuable. But when we come down here, step 4, the short seller endgame. So all right, I know this is a lot to take in. This Reddit poster has been writing this post for about a week. So okay, remember how I explained that the repo rate started to rise in 2008 because the collateral was no longer attractive compared to cash. That means there wasn't enough liquidity in the system. Well, this time the opposite effect is happening. Ever since March 2020, the short-term lending rate, the repo rate, has nearly dropped to 0%. So the Fed is printing free money, the repo market is lending free money, and there's basically no difference between the collateral that's being lent and the cash that's being received. With all of this free money going around, it's no wonder why the price of the 10-year treasury has been declining. In fact, hedge funds are so confident that the 10-year treasury will continue to decline that they've shorted the entire 10-year bond market. I'm not talking about speculative shorting. I mean shorting it to oblivion like they've shorted stocks. So hedge funds like Citadel Advisors must first locate the treasury bond in order to swap them for cash in the repo market. It's extremely difficult to do this with the Fed because they're tied up in government BS. So they locate a lender in the market. Now, who would Citadel know? That's an asset manager. Now, he mentions BlackRock. So there have been 3 instances over the past year where the repo rate dipped below the failure rate of -3%. On March 4th, 2021, the repo rate hit -4.25%, which means that investors were willing to pay someone 4.25% interest to lend their own money in exchange for a 10-year treasury bond. This is a major signal of a squeeze in the treasury market. It's major desperation to find bonds, with the Federal Reserve purchasing them monthly from the open market. So essentially what this is telling me is that there's a lot of manipulation going on, and it's setting up for all of these funds, again, being extremely over leveraged in a couple of different asset classes, which if one of them starts to fall and margin calls start to happening, it acts like a domino effect and everything starts to tumble. Now, remember how I talked about earlier how I don't think that AMC is actually going to be hit in a massive way by people not wanting to go out into the economy to actually go to the movie theaters in person? So coming over here, we can see that on March 26, 2021, Cinedigm Digital Funding, a wholly owned subsidiary of Cinedigm Corp., entered into an equipment purchase agreement with American Multi Cinema. So essentially what this is going to be is the equipment purchase agreements, which are effective as of March 17th, 2021, provide for the purchase by AMC of certain digital cinema equipment at certain specified dates. This is very important because when you come over here, we can see that this is going to be Cinedigm's website, and you can see that movies, shows, networks, and investors. Cinedigm is a streaming service, so it is very possible that AMC is going to be getting into the streaming services market in the near future. Now, that's not to say that the movie theater industry is going to die. That is possible, especially with people may not wanting to go out into the market. But if AMC can pivot and get into the streaming services market, and they can actually get a significant market share, this squeeze could go even further than we expect, because AMC would be able to pivot their business model and give the consumers exactly what they want. Now, we've also seen some updates from the financial regulatory institutions that retail traders are actually going to be protected if a squeeze happens. Now, it's not really if a squeeze happens in my mind. I do think a squeeze is extremely possible over the next year on AMC. It is setting up exactly like we saw with GameStop, and there is even more manipulation occurring in this situation than there was with GameStop. So there was this really long SEC document that was posted yesterday, so I'm not going to go over it in this video in depth because we covered it in my last AMC video. But if we come over to this brief breakdown, brokers like Robinhood or Citadel's clearing arm could have all customer accounts transferred to another broker if they go bankrupt. So if a broker has too many loans outstanding, the SRO and SEC can force compliance from members, mirrors the DTC can liquidate company holdings, but not the retail investor. So essentially what this whole entire document is saying is that retail is going to be protected if stuff starts going crazy again. Now, we're also seeing some notices from brokerages like Charles Schwab that are upping their margin requirements on short positions for two stocks, and these two stocks in particular, surprise, surprise, AMC and GameStop. So this 300% margin requirement for short positions was actually 150% in February and 300% in January. So the fact that they upped the margin requirement suggests to everybody that they are preparing for January, sorry about that. They are preparing for January-like situations coming in the future. So coming back over to the chart of AMC, let's pull that up. We can see that the stock is now trading down about 2% today. So this could be a good buying opportunity if you still are not fully into AMC yet. But as I say in all of my videos about these speculative stocks, I don't think it's ever best to put your entire portfolio on one bet, especially when a lot of it is going to hinge on a short squeeze. Now, do I think that AMC has the possibility to do the biggest squeeze of all time? Absolutely. Everything is lining up for this. I just want to make sure that you guys are protected as well, because hedge funds in these institutions are going to be doing everything that they can in order to win. So they could do really anything. They could come out and short the entire market to oblivion. We could see some massive crashes over in a couple of different asset classes. We really don't know what their plan is at the current time, but right now I do think a squeeze is imminent. So that is going to be it for this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. And don't forget, if you guys would like to help out and support the channel, make sure you check out that Webull link down in my description down below. You guys get 2 free stocks valued up to $1,850, and I also get a free stock as well. So that is going to wrap up this video. I hope you guys are having a really profitable day, and I'll see you guys in the next video.